Ladies and gentlemen, good day and welcome to AHLUWALIA Contracts India Limited Q2 FY21 post-results analyst conference call hosted by Ambit Capital. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Varun Ginodia from Ambit Capital. Thank you and over to you, sir.
Thank you so much, Vikram, and good afternoon, everyone. On behalf of Ambit Capital, I welcome you all to Q2 FY21 earnings conference call of AHLUWALIA Contracts Limited. Today we have with us from the management Mr. Shobhit Uppal, Deputy Managing Director, Mr. Vikas Ahluwalia, Whole-Time Director, Mr. Satbeer Singh, CFO, and Mr. Rohit Patni from Investor Relations. In terms of flow of the call, Mr. Uppal would give a brief summary of the results and the outlook, and then we'll open the floor to Q&A. Sir, over to you.
Thanks, Varun. Good afternoon, everybody. So we have announced the financial results for Q2 FY21. During Q2 FY21, AHLUWALIA Contracts has achieved a turnover of 434.51 crores and a PAT of 17.96 crores in comparison to a turnover of 433.69 crores and a PAT of 13.08 crores in Q2 FY20. EPS of the company for Q2 FY21 is 2.68 as compared to 1.95 in the corresponding quarter last year. During Q2 FY21, the company's EBITDA margin is 7.87% as compared to 8.97% and a PAT margin of 4.07% as compared to 3% in the corresponding period of the last year. During HY1 FY21, the company has achieved a turnover of 684.36 crores and a PAT of 25.44 crores in comparison to a turnover of 837.71 crores and a PAT of 37.20 crores in the corresponding first half of the last year. EPS of the company for HY1 FY21 is 3.80 as compared to 5.55 in HY1 FY20. During HY1 FY21, the company's EBITDA margin is 7.70% as compared to 10.32% and PAT margin of 3.64% as compared to 4.41% in the corresponding period of the last year. The net order book of the company as on date stands at 8120 crores. We have got orders worth 1243 crores in this financial year till date. Thank you. We are open for questions now.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone phone now. If you wish to remove yourself from the question queue once your questions have been answered, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star 1. We have a first question from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yeah. Good afternoon, sir, and congratulations on a decent set of numbers. Sir, my first question is, given the COVID and given the lockdown and everything, is it possible to some kind of run rate? If I'm not wrong, I don't think you've given any guidance for FY21. So, are we in a position to guide for the H2? And do you think any comment on the labor availability or readiness of project size, which you can comment on?
Uncertainties still persist, Mohit. So it would not be prudent for me to give any sort of run rate. But having said that, I had mentioned in my last con call that things are improving, and we were at about 60%. Now we are at about 80%, and H2 obviously will be much better than H1. But I would not be in a position to give any run rate as things stand today.
Okay, understood, sir. And secondly, on this PAMS, PWD AIMS, the largest
Jammu.
order which you have towards
Jammu.
Yeah. So, have you started the work? Have you started the initial work? And is there any update which you can share?
Work started. No. We've actually begun construction on the ground.
Okay. Last
We've
one
begun
is
construction
Mandale,
on the ground. Sorry?
on the Mandale depot contract, which you received, I think, in this in last few days. When do you expect you start the construction?
We should begin construction in the next 1 month.
And what is the tenure of that contract?
It's about 40 months.
This Mandale depot is 40 months.
Yeah.
Yeah, nearly 40 months.
Yeah. Understood, sir. Thank you, sir. Thank you, and best of luck. Thank you.
Thank you.
Thank you. We have next question from the line of Himanshu Upadhyay from PGIM Mutual Fund. Please go ahead.
Yeah, hi, good afternoon. I had a question on our numbers per se and our path ahead. If we look in last 4 years, our order book has increased quite significantly, okay? So remaining order book, what we show, has grown from 3,600 crore to 7,400 crore at FY20 end. And I think currently it would be around 8,000 crore based on what numbers we have, okay? But if we see my income from operations now, they have not moved in line with the way the order book has grown, okay? And even my margins have been slowly, steadily come off only from FY16-17. What is the path ahead for us? Means, do you see or scaling up of our business? Do you think we can scale up better from here on? And what have been the challenges that we have not been able to scale up the way we've been able to win the orders? And again, on the margins trajectory side, what would be your thought process now? And once more projects start, do you think you will require a lot more capital infusion? So let's say in terms of gross block and working capital cycle, or how are you thinking on those terms? And again, can you lay some thoughts on these things? It would be quite helpful to understand the future trajectory of the business.
Okay, so our order book has swelled up in the last 2 years, not in the last 4 years. So we are very comfortable now. It's, as you rightly said, it's at about 8,100 crores. So this is a result of the efforts of the last 2 years. As far as the margins are concerned, we feel that had COVID not hit, our margins would have been much better. In fact, we would have been on our way to achieve the margins that we had achieved in our glory days, that is around 2010 and prior to that. Having said that, we've over the last year and a half, we've been cleaning up our back. There have been a few write-offs also. In spite of that, I think we have been at par as far as the margins are concerned with most of our peers, if not better. Going forward, this financial year, as I said, there is really no guidance that I can give. But, because we are well stocked up as far as our order book is concerned, I think FY22 onwards, we should be in a position to match our peak as far as the margins are concerned. As far as our CapEx is concerned, we have been able to keep the CapEx in check. That is because of aggressively, utilizing our existing assets. Going forward, as far as this year is concerned, we don't, in spite of a very healthy order book, we don't see a major increase in our CapEx as far as this financial year is concerned. Have I answered your question? Have I missed out on anything? So
follow-ups on these. So do you think that the margins which you were doing in FY16-17, nearly 13% and 13.5%,
Are those achievable, or so should we assume that the businesses what we have taken or to build the order book are as margin accretive as they were the business which we were having 4 years back, or do you think because even if we have see FY20, it was around 8%, which is pre-COVID type of numbers, okay? And FY19 also was lower than FY16 and FY18. So have we compromised on margins, or do you think the margins were there? And because the scale has obviously increased from FY17 1,400 crore to nearly 19.
No, we haven't compromised on the margin. There were a lot of, if I take you back to our earlier con calls, there were a lot of extraneous factors which led to the margin, not only for us, but the entire infra industry margins getting suppressed. So if you see the quality of order book, they comprise of a lot of hospital projects, some education projects. Our exposure to the private sector is limited. So as I said, going forward, FY22 onwards, I think we would be getting back to our glory days as far as margins is concerned.
And revenue growth should also start improving. Means just to last question, then I'll join back the queue.
Yeah, it will. Obviously, the order book, the healthy order book shows that the revenue will increase. But this year, for obvious reasons, that increase is not going to be there.
Okay, I'll join back in the queue.
Yeah.
Further queries. Yeah.
Thank you, sir. We have next question from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Good afternoon, sir. Thanks for taking.
Good afternoon, Vibhor. Hi.
I'm happy Diwali to the management.
Thank you.
So my question was actually two questions. One is on the margins front. Basically, sir, the last quarter, of course, we had the April month of almost negligible revenue. And of course, because of lower executions, our margins was at around 7.5%. This quarter, we've almost doubled our revenues as compared to last quarter. And as you mentioned that as compared to last quarter, 60%, now we are probably running at around 80%. So any specific reason that even in this quarter, we could not jump the margins significantly on a quarter-on-quarter basis? Any exceptional write-off or anything else which held up the margins in this quarter?
Look, first of all, there is a significant headwind which we continue to face, right? COVID has not gone anywhere. While we have labor now is at about 80%, but at the end of the day, the productivity still continues to suffer. There are a number of factors which are contributing to a lower productivity and which in turn is affecting the margin. One is, of course, the supply chain continues to be affected. B, due to the protocols which are in place on project sites, the productivity of the labor is down. Right, so that is why while we've been able to overcome one challenge in of increasing our top line, but as far as the margins are concerned, they continue to be affected, and that will continue to remain, I think, for another 6 months.
In fact, that was about to be my next question. By protocols, I would assume you're meaning those social distancing norms and that the maximum amount of labor that you can have in a site, right?
Exactly. That, and then obviously because of these social distancing norms, the productivity on ground suffers, right? Be it for casting of concrete or doing brick walls or laying stone and aluminium and facade and so on and so forth. And obviously what people are forgetting is that the supply chain is yet not back to normal.
Right.
Just to give you an example, COVID is one, but then if you see, say somebody asked me about Jammu. Now Jammu work is happening at a breakneck speed, but for the last 15 days, we haven't been able to get steel to Jammu. Why? Because Punjab, no trains are going through Punjab. So Jammu, there is zero, in sale stockyards, there is zero stock. And so the supply chain is constricted. These are factors which are contributing to or hitting the margins.
Right, sir. And you expect that this will probably be there for some more time, maybe 3, 5, 6 months?
Yes, as I said, the rest of the financial year, yes, these factors are going to be there. We have to live with it.
Sure, sir. I know it's difficult times for everybody. In terms of the order book, sir, now that we have got a very strong order book of more than 8,000 crores, what is the pipeline that you see ahead in terms of some large projects that we are looking at? Are we looking at the Central Vista project, the other packages that might come out of it, or some other key projects which you would be looking at? And also, if you could just provide a quick update on what is the execution activity on some of the key projects like Gardani Bagh and your Nagpur project and the Fine Hospital project.
Yeah, so our AIMS projects, I've already told you about Jammu. That project is happening at full speed. This notwithstanding the supply chain issue, which hopefully will be over in the next 10-15 days. As far as our other AIMS 2 AIMS projects are concerned, we are on target to complete them in May next year, both Kalyani as well as Nagpur, both the AIMS. In fact, 50% of both these projects have been handed over and have been made operational. The academic blocks are made operational at both these locations. As far as the hospital is concerned, that we will complete in May next year. As far as Gardani Bagh is concerned, Gardani Bagh project has begun, the piling has begun on the ground, and now with obviously continuity being there as far as the government is concerned, we feel that we foresee no problems as far as our projects on the ground in Bihar are concerned. As far as what was the other part of your question? Can you repeat it, please?
So how do you see the pipeline in terms of either Central Vista project or some of the key projects that we are targeting or looking at?
Yeah, so yes, we will evaluate. We will participate in some of these projects, but on account of having a healthy order book, we will not bid indiscriminately. In fact, we are letting go of a few projects. There are 2 or 3. We've seen recently that there have been 4 or 5 IIMs which have been bid out. We participated in 2. We felt that the competitive intensity was very, very high. That's why we then let go of a couple. So we are doing our due diligence, and as I said, we are not bidding indiscriminately.
Great, sir. Thanks for taking my questions and wish you all the best.
Thanks. Thank you.
Thank you, sir. We have next question from the line of Shravan Shah from Doddle Market. Please go ahead.
Thank you. Sir, as you are saying, first clarification, the labor availability that you said 80% is as on today, or it is for average of second quarter?
No, as on today.
Okay, for second quarter, what was the labor availability, broader average?
No, second quarter, the labor will, as I said, last con call, we were at about 60%, so it has gone up to about 80% now. So
okay, and in terms of the company operating efficiency, last time I think you said that it is kind of a link to the labor, so we were working at 60%. So in the second quarter, at what efficiency broader are we at 70% plus efficiency level, and now at 80% efficiency level?
No. Very difficult. As I mentioned, as an answer to the earlier question.
Got it. It is difficult. I got it.
Yeah.
Now, sir, coming back to the the revenue and the margin. So that's the 2 major question mark for all the analysts, despite so much order book. So let's assume now, as you are saying, there are supply chain issues are there. Labors though have improved to 80%. First of all, can we see a flattish to 1 to 2% growth in the third and fourth quarter, or that is also difficult to say?
I'll be candid. Third quarter, there are continuing issues, headwinds. One, I have already mentioned, supply chain issues. B, our projects in Delhi, though construction continues to happen in NCR, but productivity is not high, again for obvious reasons because of pollution. So third quarter, I don't see any major improvement happening, but fourth quarter, yes.
So fourth quarter can be a 5 to 10%, or it can be a higher than 10%.
Yeah, don't put words in my mouth, but fourth quarter will be significantly better.
Okay, and then coming to for the full year of FY22 and 23, then on broader level, because last 3-4 years we were marginally growing kind of a thing. Then can we expect a 20% plus kind of a run rate, because our order book is definitely 8,100 crore, and maybe we will be winning a couple of more projects. So
yeah, 15 to 20%. Yeah, that's our target. FY22 onwards, 15 to 20% growth.
And you already mentioned that the margin in FY22 would be coming to the previous peak level, that is close to 13% kind of a thing that would be coming.
Yes.
Yeah. Sir, I need now order book breakup segment-wise, region-wise, and the government-private. That would be helpful.
I think Rohit will provide that. Rohit, go ahead.
I'm sorry, we lost the line of Mr. Rohit Patni. I'm calling him again.
Satbir, can you provide that, Satbir?
Yes, I'm giving that. That is, government is 80% and private is 20%, and geographically north is 55%, east 33%, west 10%, and segment-wise commercial 6.31%, hospital 52%, institutional 24%, residential 12%, and infra 5%.
Okay. And sir, any write-off or liability written back in this quarter?
Yes. The liabilities written back is around 6-7 crores and 3 crores, sorry. And written off is not there in this quarter, but we have made provision for around 5 crores.
Okay, 5 crore you made the provision. Okay, that's it from my side. Thank you.
Thank you. We have next question from the line of Mohit Kumar from DAM Capital. Please go ahead.
Hello.
Hello.
Yeah, thanks for the opportunity once again, sir. Sir, have you provided anything in this quarter? Last quarter, I think you guided for some write-off on the data side.
Yeah, last quarter we have a written off around 5 crores, and this quarter we have made a provision. We have not written off. It's also 5 crore approximately.
Okay. Secondly, on this, sir, on the last quarter, you said something about there is some issue with receivables from Bihar and West Bengal. Can you please comment on that? Have you seen any improvement? Something?
Yeah. Yes, definitely. There is improvement. Most of our receivables have come in. And whatever is pending, we are hopeful that in December we will be up to date.
And in general, how has been the payments, sir, in the last quarter, Q2? And what are you hearing from the client for, in general, what do you think about, the payment cycle?
There is an improvement. As far as Bihar is concerned, just prior to elections, some payments had come in, but there was a bit of a logjam because the state machinery had, got busy with elections. But we are hopeful. As I said, in December, all our payments will come. Bengal, things have improved substantially. So again, by December, our payment should be up to date.
So we can
generally also, by and large, I think last month and a half, there has been an improvement all around with most of our clients.
Can we safely assume that working capital will not deteriorate in FY21?
I think so.
Okay, understood, sir. Thank you.
Thank you. We have next question from the line of Vaibhav Shah from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So in last quarter, we had guided that we have taken a write-off of around 5 crores in Q1, and there is a pending write-off of around 10 to 15 crores, which will take.
Sir, I'm sorry to interrupt. Mr. Shah, would you please like to use the handset while asking a question? Please use the handset. So we're not able to hear you properly. Thank you.
Can you hear me?
Yes. Please go ahead.
Sir, so in the last quarter, you had told that we had taken write-off of around 5 crores in Q1, and we had guided for write-off of around 10 to 15 crores in Q2 and Q3. So where are we on that? So we will take another 5 crores write-off in Q3, or what is the plan?
We have provided 5 crores in this quarter also, made a provision. We have not rightly written off. But we have to see what the situation would be there for recovery. That's accordingly that will be any kind of provision or written off. But definitely there would be there.
Okay. And secondly, on a couple of projects. So what is the current status at government hospitals in Chapra and Nalanda in terms of
projects? The execution is well underway. And as far as Nalanda is concerned, both these projects actually in the next 1 year would be substantially completed.
And what would be the broad status of the completion as of now? Have we made a certain progress on those?
Which ones? You're talking about these projects only?
On these only. At Nalanda.
As I said. The projects are well underway. In fact, at Nalanda, the structure is almost complete.
Okay. Sir, and lastly, and in NCR projects, so what has been the impact? Is there any ban due to pollution or a partial ban or something, or we are going on track?
No, we are. The construction is happening. As I mentioned earlier, there is no blanket ban on construction as yet. But productivity is low on account of DG sets are banned.
They've tightened some rules for pollution, etc. So that's why there is a little slow. There's a lot of checking happening at sites from the department, things like that.
So, DG sets are banned. So that affects progress. Then secondly, fly ash is no longer available. It can't ply. Fly ash laden trucks cannot ply within the city limits. So such things are affecting the production on the ground.
Okay. And sir, can you provide a ballpark figure for the NCR order backlog in our current order book?
Would you have that, Satbir or Rohit?
Sir, I have no data, please.
27% in Delhi NCR.
Okay. Thanks a lot. Okay. Thank you, sir.
Thank you. To ask a question, participants may press star followed by 1 on their touchtone phone now. We have next question from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking
Good afternoon. Yeah.
Sir, there are a few questions in terms of the ordering flow has remained good so far in first half and continued in Q3. So, sir, can you throw some light in terms of the guidance and probably how much you're targeting this year and capex done so far?
I think in terms of order book, as I said, we are bidding very conservatively. We are not aggressive. We don't have an aggressive target. We stand at about 8,120 crores, and there is a project of Sion Hospital in which we are L1, which we are also expecting shortly. So, other than that, maybe another 1,000 crores as far as further orders are concerned. As far as the capex is concerned, I think this year it should be anywhere between 25 to 30 crores. Till date, we have done about
8.7 crores.
How much?
8.7 crores.
8.7 crores.
So this Sion Hospital, what is the value, sir?
Sion Hospital, the value is about 500 odd crores.
Okay, so over and above that, we are expecting around 1,000 crores likely to reach in this year.
Yes.
And sir, on the central Vista pipeline, obviously you have given the input during the call, but any additional input like what could be the pipeline in Q4, because most of the contractors are expecting the awarding from that particular project to pick up from Q4, and the pipeline is at around 15,000 crores with a ticket size of around 500 to 1,000 crores. So what is our view? So are we looking to bid, as you said, you will be bidding selectively. So any chances of bidding at least 4,000-5,000 crore and winning at least one or two packages, something like that?
As I said, we will bid selectively. It's not that we are not going to bid, but we will not bid indiscriminately and not aggressively. So another 1,000, 1,400, 1,500 crores. That's what the target is.
Bihar projects now should be back on track, like post the election and things settling down, right, sir?
Sorry, come again. Your voice was not very clear.
The Bihar project should be.
Yeah. Bihar is now on track with continuity in the government being there. And what is good is, look, we are primarily working with two departments there. One is the state PWD, and one is Bihar Medical. And with both in the ministries released yesterday, the names, there is continuity in terms of the ministers at the helm of affairs. So we feel that the projects will continue now and without any impediment.
And sir, on the can you just throw bookkeeping question? What is the gross debt number and the mobilization outstanding as on September and retention outstanding as on September?
Just mobilization total outstanding 250 crores.
Okay.
And retention is total current and non-current. It's 165 crores. And borrowing is 44 crores. That is on the face of the balance sheet, I think so.
Okay, that's okay. So this mobilization is interest bearing, right, sir?
Out of which that's private are non-interest bearing and government is interest bearing.
So can you have the breakup, sir?
That Rohit will provide in later, please. I think so.
Right, sir. And sir, on the coming back to the receivables, obviously the receivables are high, but do you feel that most of the government agencies would make payments in Q4 and we can see receivables coming back to around 75 to 80 days? Likely we can see that, sir, end of this year?
Yes, as I mentioned earlier, we are receivables will come in control. We already are seeing an improvement in the payments which are coming from the various government agencies.
That's it from my side, and thanks a lot, sir, and wish you happy Diwali and happy New Year, sir.
Thank you. Same to you.
Thank you, sir. We have next question from the line of Parvez Akhtar from Edelweiss. Please go ahead.
Yeah, hi. Good afternoon, sir. Couple of questions from my side. First, I think you gave the order book as on date. Would it be possible to get the order figure at the end of Q2?
End of Q2, it was 7590.
Sure. Also, I mean, you gave status of some of our major projects. Apart from those, I mean, how is the work happening on some of the other projects like the Central West project that we had got, or the NBCC Calcutta Auditorium and the IIM Nagpur project?
Yeah, project pace has picked up. As I said, we are at about 80%, and the Central Vista project we are working full speed. It's just that in the last 20-30 days, because of the effects of pollution, there are productivity issues on the ground. As far as the Kolkata auditorium is concerned, we are on target to complete it in about July, August next year. Sure. Nagpur and Kalyani AIIMS I'd already mentioned earlier. By May, June, we will be handing over. We've already partly handed over or commissioned some building, the academic blocks, on both the locations. As far as the hospitals are concerned, in May, we should be handing it over.
So we also had some private sector projects, I think, in Pune. So how has been progress there over the last, let's say, 1 to 2 quarters?
So there are Pune continues to be hit by COVID. So that has affected the sales as far as the residential projects is concerned. But, over the last 15-20 days, because of the festive season, the sales have picked up there. And now the client is talking of starting 2 more towers there, which he'd held back. So that is good news. As far as the other part of the project, which is a commercial project, which is totally, booked by Brookfield. So that is going on full speed.
Sure. And lastly, a question to Sadhbir-ji. This quarter also our other income was pretty high. So are there any one-offs in the other income this quarter?
It's a 3 crores approximately liabilities written back in this.
Okay. Sure, sir. Thanks. That's it from my side. All the best for future and happy Diwali to the management.
Thank you. Same to you.
Thank you. Anyone who wishes to ask a question may press star and 1 on your touchtone phone now. We have next question from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Thanks, sir. Congratulations on good set of numbers.
Thanks,
My
Parikshit.
question is on, so we had spoken about social distancing impacting the COVID-related issues and supply chain issues leading to softer execution. Given it's have been a more normalized kind of scenario, so are we already we have averaged about 400 crores of turnover last 2 quarters. So as per the current order book and so we should be somewhere around 600 crores if these issues were not there.
Yes.
Okay.
Could have been.
Okay, got it. My second question is when I see your order book out of 8120, so I think the Mandale Depot's order is already included in that, and including that, about Western India exposure is about 10% of about 800 crores, out of which Mandale remains the largest contributor. So going ahead into next few quarters, so what is our stance with respect to the Western India bidding, and how do you see the order book ramp up here? What kind of opportunities do you see here? Because at 10% in the mix, it's a very small contribution. So I don't know whether it really makes sense to exist in this market, and if not, then what is the way ahead in terms of growing this order book?
You're specifically asking about the Western region?
Yeah, the Western region.
So, as I mentioned earlier, we are shortly hoping to get the Sion order also. So, so if you then between Nagpur, Mumbai, and Pune, the Western region now contributes or will contribute substantially to our total order book.
Okay. Because as of now, you're at, I think 10% is the contribution, roughly about.
Yeah, but but now it's if you see, I think
it will increase to 1,700 crores after sign.
Yeah.
I think so.
After sign, yeah, it'll be more. It'll be in excess of 2,000 crores.
Yeah.
The breakup of the percentages which you give was on Q4, like 7,500 crores order book or 8,120 crores order book?
Yeah, that is 7590.
Okay, got it. So now coming to the Mandale Depot project, so I mean, is it the first kind of a project you are doing for a metro project? And what
No, we've done numerous depot projects. In fact, we had done the famous project that we've done for Reliance Infrastructure, the depot in Mumbai for phase 1. Then we'd done a depot for the Bangalore metro at Pina. Then we'd also done a depot for the airport line in Delhi. So we are quite experienced as far as depots are concerned.
So coming back to the one big piece which is missing, in our order book, a region which is south. I think I've asked it earlier also to you in multiple calls. So any thought do you have with regards to the southern Indian market? How do you see it, or we still continue to be away from that market?
So which market? Come again, please. Hello.
Southern India, so South India.
We continue to stay away from southern India at the moment.
Okay. Okay, sir. And wish you all the best. Look forward to again interact with you.
Thank you. Thank you so much.
Thank you. Reminder to participants to ask a question. Please press star followed by 1 on your touchtone phone now. We have next question from the line of Varun Ginodia from Ambit Capital. Please go ahead.
Hello?
So we can't hear you. Please unmute yourself and ask your question. Thank you.
We can't hear him.
Mr. Ginodia, please unmute your line if you have muted yourself and ask your question.
Am I audible?
Yes, you are, sir. Please go ahead.
Sorry for that. So, sir, my question was on the revenue you booked in second quarter. As you said that, the labor availability was about 60% in the quarter gone by. Despite that, your revenue was roughly in line with the revenue in the same quarter last year. So, what led to that, execution ramp up despite constraints on the supply chain side and the labor availability side? If you can throw some light there.
So, we had invested in techniques of off-site construction. Some projects, pre-engineered techniques are being used. And, we are also, as far as finishing is concerned, like pre-cut stones and tiles, we are doing work off-site and then delivering them to site. That plus, of course, a healthier order book led to a similar kind of run rate when we compare it to last year.
Okay. Because your guidance or maybe your commentary sounded a bit cautious on the 3Q side. So I thought, if 2Q we were able to do similar numbers despite 60% labor availability and 3Q already at 80%, then we should be able to do pretty good growth in 3Q as well and not just 4Q. Is that a fair assumption that second half overall should show a good growth and not just 4Q?
Well, I did mention that in the last con call also that the second half will be much better. But Q3 we continue to see a surge in the pandemic. So that is why it will not be right for me to comment as far as Q3 is concerned.
Okay.
And then pollution obviously does affect the NCR projects also. That is why I am cautious on the third quarter. But fourth quarter, traditionally fourth quarter is also the best quarter as far as construction companies are concerned. And now, with labor, by December end, we should be at 100% as far as labor is concerned. Supply chain issues are something which are beyond us. So that is something which I feel should also be ironed out by the time we enter into the new year. So that's why I'm saying I'm quite bullish on the fourth quarter.
Got it. Thank you so much. Thank you.
Yeah.
Thank you. To ask a question, participants may press star 1. Your next question from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Yes, sir, just one last question on the margins. So you did mention that because of COVID, there has been a hit on margins. So what kind of hit on account of COVID you have had on the margins, and if you can quantify the impact?
So, come again, you're saying you want a quantification of how COVID has impacted the margins?
Yeah.
Parikshit, it's very difficult to put that. We are still in the process of quantifying that. And I had mentioned this last time around also. It's very difficult as on date to put a figure.
But what kind of cost will be coming, extra cost? It's like idling manpower, idling cost, and so what could be potentially the cost? Which
the main thing is productivity of the labor. That is something which we are still assessing. Abhi tak to the projects were stalling. Now the projects have started. We are at about 80%. Now we are trying to calculate what is the productivity in terms of masons who are doing the block work, who are doing the plastering, so on and so forth. And then the impact in terms of the excess infrastructure we have to create to maintain social distancing, so on and so forth. So I think it'll be very difficult for us to put a figure. It'll take at least this entire year. Only when things normalize to a certain extent will we be able to put a figure as to how COVID has impacted our margins. And then out of those margins or out of that impact, what is it that the client is willing to bear, or what percentage is, because everything is fluid at the moment. I did mention last time around also, we are keeping all our clients informed as to whatever steps we are taking, whatever expenses we are incurring, whatever loss or hit on productivity is happening, we are keeping our clients informed on that. But at the moment, there is no surety. Clients are being sympathetic about it, but no client has come forward and said, okay, we'll compensate you this.
Right. Because I don't think the material costs have gone up, so employee costs have been, LNH cost has been lower YOY. Material cost is only the reason, which is almost expansion of 132 basis points, which is impacting on its margin. Okay, I got your point. Difficult to quantify.
Yeah.
Okay, sir. Thank you. That's all for me.
Thanks.
Thank you. We have next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you, sir. Sir, what is the unbilled revenue as on September?
Unbilled revenue is 187 crore.
187 crore. Okay. And sir, some numbers on the quota and any progress or any thought that it can when it can be monetized? उसके ऊपर कुछ सर सभी सर कुछ anything progress और कुछ discussion हुआ है?
It's half year ended, revenue was 55 lakhs and we have incurred loss of around 4.76 crore as per accounting recognition, and but there is cash deficit would be around 97 lakhs for this half year. And for the going forward this year, we are expecting that cash deficit would be 1.8 crores approximately for this year. And for the next year, we are targeting that we will be able to get the revenue of around 80 lakhs, 70 to 80 lakhs per month. And thereafter, we can see that it would be at par. Cash deficit would be at par for the next year.
So currently, in terms of the how many utilization in the
actually, what is happening there is 76% utilization is there for the ground floor and second floor, and but there is a revenue that you can say around 44% out of it, because that LOI has been issued, and we are expecting that 76% would start from end of the December. And this is basically, and that's we are expecting the next fourth quarter revenue would be around 1 crore. That's why.
Okay, and sir, any monetization thought with the hotel we were thinking to somebody can come, anything on that?
Because
we are still talking. We are still talking to a lot of players. So we are also considering to convert the space into a commercial office area. We have received some queries, but we are still, talking to them. If somebody takes a large piece of the space, so we are talking to a couple of people. There is a good possibility.
Okay. And sir, in terms of the what is the value of the flat inventory that we have taken over? I think for last couple of quarters we are not discussing. Just to refresh, what's the value currently, the flat inventory that we have?
As on 30th September, 48 crore.
48 crore. So has it reduced since March, or is it the same?
This quarter, basically, there is sale of 4 crores, and that's why that has been reduced from 53 to 48 now.
Okay.
We have sold 3 flats during this quarter.
Okay. Okay. So, and whenever we are doing that, are we booking any loss or anything in our P&L?
Basically, already you can see segment-wise result. That's the 95 lakh loss this quarter on the flat sale.
Sorry, sir. What is it? 95 lakhs loss this quarter?
Yeah. Yeah, this quarter and this half year is the same.
Okay. So 95 lakh loss, that is a part of other expenses that, or it has been adjusted against the other income?
That basically, that is the increase and decrease in basically real estate inventory.
Okay. Got it. And sir, any progress on arbitration, any expectation of anything on arbitration fund?
No, at the moment, nothing in this quarter.
Okay.
The award that we had got for the SPM stadium, that has been challenged by CPWD.
Okay. Thank you and all the best.
Okay, thanks.
Thank you, sir. We have next question from the line of Vaibhav Shah from Centrum Broking. Please go ahead.
Yeah, thanks for the follow-up. I only have one question. So what is the current status of Mohammadpur project? Has the execution picked up?
Yeah, it's taken off and the project is well underway.
So we can, by when do you expect to complete, maybe in the next couple of years?
Yeah, about 2.5 years. About 2.5 years.
Okay, so we don't foresee any issues as
no,
of now.
The government has started funding because, part of the funding had to come from Nauroji Nagar. Sale proceeds on Nauroji Nagar. That has started happening now.
Okay. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I'd now like to hand the conference over to Mr. Varun Ginodia from Ambit Capital for closing comments. Over to you, sir.
Thank you so much, Vikram, and thank you so much, sir, for answering all the questions patiently. I hope the call was helpful, and thank you for allowing us to host this call for you. I will, hand it over the call to you if you have any closing comments.
Thank you everybody for joining in. Hopefully, we could answer all your questions. If there are any further queries, please feel free. Rohit or Satbir will get back to you individually. Thank you once again and all the best. Stay safe. Bye.
Thank you very much, sir. Ladies and gentlemen, on behalf of Ambit Capital, that concludes this conference call. Thank you for joining with us, and you may now disconnect your lines. Thank you, sir.
Thank you.